Hey guys, Max here, and this is, of course, your daily market update for yesterday, which was obviously Monday, the first day of the week, but it was Memorial Day in the US, so American markets weren't open, but there was still plenty to talk about. Plenty went on in the rest of the world and in the US as well, even though the markets were closed. Now, we did, of course, have futures for the American equities happen. We, of course, got some trading, pre-market, post-market, after hours, whatever you want to call it. And for the S&P 500, we saw futures for that index rise by 0.5%, with the Dow Jones rising by 0.4% and the Nasdaq rising by about 1%. It was then actually quite good for American stocks, even if we don't know individual movements for every individual company. In general, sentiment was quite good, mainly on this news that actually China might be opening up and things might be getting a little bit better. Just a general slight rotation into risk on assets that we've been seeing to and froing coming constantly over recent months. Sentiment changes on a dime these days, and that's just what has happened over the last week. Now, for the rest of the world, actually, stocks were pretty strong again. As you can see, things were green for the most part. In Europe, stocks were pretty strong. The Stoxx 600 rose by about 0.06%, and the FTSE 100 just ekes a little bit higher at 0.1%. You can see that stocks were decent in Asia. They were quite strong in the rest of the Americas as well, particularly in Canada. In general, it was a risk-on kind of day. As a result, then, the MSCI World Index, which tracks pretty much every publicly listed company in the world, rose by about 0.6%. Now, in the world of foreign exchange, what happened there? Well, we saw the US dollar, which has been strengthening week by week recently as a safe haven asset, as it's just a little bit more reliable than really any other currency in the world right now. Well, we've been seeing the dollar strengthen, but yesterday we actually saw it weaken slightly, falling by about 0.3% for its spot index. The euro rose by about 0.4% and is now sitting just about at $1.08 each, and the pound rose by a similar amount and is now sitting at $1.27 each. So there has been a little bit of strengthening for these foreign currencies as, again, risk on assets do well. That flight to safety into US dollars just isn't really present right now. Now, that same sentiment was echoed in the fixed income asset market, in the bond market. Again, not really for the US market because it was closed, but everywhere else, actually, yields rose. The German 10-year yield rose by 9 basis points and is now at 1.06%, just above that 1% mark. And the British 10-year yield rose by 7 basis points and is now at 1.96%. So again, just a route away from risk-off assets into these tech stocks and things like that. Now, there was actually some bad news, or at least I would consider it bad news, and I think most people would agree with me. And we are, of course, talking once more about oil prices and energy prices, because guess what? Oil keeps going up. WTI crude oil rose by 1.8% yesterday, and it now sits at $117 a barrel. Brent crude oil is sitting a touch higher at $120 a barrel. And this is obviously not good news. It's based on the EU ban on Russian oil that we will talk about in detail in a moment. There's also a little bit of movement because of the Chinese lockdowns based on their COVID numbers. Well, their COVID numbers, or the reported ones at least, are going down. So there's a belief that the Chinese economy is going to start picking up again, and that's going to increase the demand for oil. For gold, we haven't really seen much of a move recently. It's still sitting at about $1,850 an ounce. And then finally, we have the crypto markets to look at. And as you can see, it was actually quite a strong day and crypto prices went up for the most part. I'm sorry, I'm blocking out Bitcoin here, but it's sitting at $31,600, up about 3% from the day before. Ethereum is sitting at $1,970, up almost 4% from the day before. Most altcoins saw similar sort of movements, up by 1, 2, 3, or 4%. We did see some big movements from ADA in particular, from the Cardano network, which is probably because they have something called the Vassal hard fork coming out in about a month, which is supposedly going to be quite a large, strong update for the blockchain. And so maybe people are moving into that asset to try and capitalize off of that. It's quite difficult to understand though. There hasn't really been any specific news driving this rally. We've known about the hard fork for a while now, and as you can see, it just blew up by 26% overnight. So now, outside of the markets, what happened in general business, finance, and investing news? Well, as you can see, oil prices, they jumped for one of the main reasons being that the EU is actually going to try and put forward this ban on their crude oil imports from Russia. The reason this spikes prices is quite obvious. It reduces the supply of oil in Europe. It reduces the supply of Europe in the West and with our allies in general, and that's going to force prices higher. Now, they aren't going to be banning all crude oil imports, but they're aiming for a 90% ban by the end of 2022. A certain few caveats and things waiting. We're not exactly sure what Hungary is going to do, but they are not happy about this at all. And of course, we've heard this news many times before. The EU in particular has been talking about banning oil and banning natural gas imports from Russia for literally 4 months now since the war started, and it hasn't really amounted to much. We're still buying those energy sources from Russia, still flooding their markets with euros and pounds and their money, but we're just now forcing prices upwards and making it all a little bit more painful for ourselves. Unfortunately, oil and gas and energy being a worldwide market, well, this impacts everyone everywhere, and America isn't immune to that effect. As a result of that, gas prices in the US have just reached a new absolute high of $4.62 per gallon. Of course, that's not very nice either. That is going to be really, really detrimental for inflation in the US. It's going to be really difficult for people. Public transport in the US really isn't quite as available as in certain other countries. So most people need to buy gas every week just to get around and to run their lives and go to work. Finally, then, the other thing that's having an impact on oil prices worldwide is, as I just mentioned earlier, China reopening. Now, as China was shutting down, as Beijing and Shanghai and these 30 million strong cities were getting, literally locked down, people were not even allowed out of their homes to go shopping. Well, we all sort of assumed that oil prices would be dropping, but they never really fell by any substantial amount. They touched $100 for a few days, but then they just started rising back up. And now that really China's ending its lockdowns, it's trying to get past its zero COVID policy. They're claiming that they have less than 100 new cases of COVID a day, which of course is false. It's just a lie, but that doesn't really matter. What matters is that they're stating those are the case numbers so that they can now stop their restrictions and get their economy back rolling again. And so, yeah, demand for oil is going to increase right as we are throttling our own supply because of these sanctions against Russia. Now, we mentioned just earlier foreign exchange and how the dollar fell after strengthening pretty much for 3 months straight, as it's just sort of a safe haven currency. And I came across this article once more. I say once more because really I've seen stuff like this before. This time citing a Bank of America analyst who is warning that the British pound, the currency that I live and eat on and make my money on, is turning into an emerging market currency. Now, the idea here is quite basic. It's basically just saying that really there's a lot of volatility with the pound, and that's more reminiscent of an emerging market currency, something like the peso, as opposed to something like the euro or the dollar. Now, you might say, why am I talking about this? Surely this isn't too relevant. Well, it's just a little bit funny because really this is utter nonsense, but it's the kind of nonsense that gets pushed by companies like Bloomberg and the Wall Street Journal and the Financial Times, globalist companies which want to push their globalist, their neoliberal agenda, and they are determined to ensure that any country which goes against that suffers as a result. Now, what do I mean by that? Well, this exact same Bank of America analyst came out with the exact same thing 2 years ago, back in June 24th of 2020, as you can see here, an almost identical article with saying almost identically the same stuff, basically just trying to push out this idea that the pound is falling, that it's faltering, that it's no longer important, and that it's irrelevant in the current day, trying to degrade Britain on the world stage so that no other country can think of going against the neoliberal agenda. Now, is this accurate? Is the British pound becoming a emerging market currency? Well, no, obviously, because this idea that they're pushing is that the pound and the British Isles, our country as a whole, is faltering and falling, which is the polar opposite of an emerging market. If it were an emerging market, we'd be growing at extortionate, ridiculous rates, not falling in the opposite direction. So I'm really not sure why they're going for that specific line of attack. They're also just conveniently ignoring the idea and the fact that actually Britain is still the 6th largest economy in the world, one of the largest soft powers in the world, has plenty of influence, has really good relations with really even the EU still and plenty of other countries. No, this idea that the British peso is here to stay doesn't really stand up to any decent criticism. Now, what is going on over in the Americas? Well, things aren't great. Of course, you know that. Markets are falling, inflation is sky high, and we're starting to get data suggesting that actually the recession is going to come far, far earlier than most people predicted. Not exactly here on this channel. We've been calling for this for a while now, but the rest of the world is finally catching up. So with that being the case, Jerome Powell and Joe Biden are going to meet to discuss the economy, to discuss inflation, and to see what they can do to try and improve the state of things, which might sound great and everything, but in reality, nothing will be achieved by this because for once, the Federal Reserve is doing the right thing. Hopefully, Biden doesn't go after his approval ratings and try and just print money again, because we all know how disastrously that ended last year. And let's be honest, that is something that he would push for again if he thought it might get him re-elected. Politicians are notably sociopaths by and large, both sides of the fence. Thankfully, though, I do actually think the Fed is on the right track finally, and that they're going to stick to their guns. And it seems like most analysts agree with this idea. Here you can see this article. The Fed won't flinch as the labor market starts to tail off, as the economy is basically falling as we enter this full-on recession. A lot of people are wondering or stating or asking the Fed to turn things around, to turn the money printer back on, to recover markets, to save the economy, because let's be honest, it won't save the economy. It will save the markets in the short term and just cause a larger crash in the long term. But it does seem like the Fed is against that idea. They know what needs to be done and they are willing to do it. We heard from the Federal Reserve's governor, Waller, who wants 50 basis point rate hikes to be on the table for the next several meetings. Now, several can mean a number of different things, but really that probably means 5 or 6 meetings somewhere in that region, maybe even more, far more than the markets were hoping of just 2 meetings. And that means that interest rates really are going to start to hike at a rapid pace over the rest of this year. On top of that, as May is ending, it is the 31st of May today, the last day of the month, we're about to see quantitative tightening really kick off as the Federal Reserve turns around and stops buying up fixed income assets from the open market, flooding the market with liquidity, and they start doing the opposite. They're going to start selling their assets onto the open market, flooding the market with supply, dropping prices, raising yields, and really seriously changing the monetary environment. It's going to start off with about $47.5 billion worth of sales per month of June. And then by September, they're going to be scaling up to about $95 billion per month, which is not an insignificant amount at all, and really should have a quite major impact on fixed income asset prices. We're not exactly sure how much selling pressure this is going to provide to the markets, just how much it's going to impact bond prices right off the bat. But my bet is that it's going to be more than enough to correct for this effect of safe haven investing, of people taking their money out of stocks and putting them into bonds. I think that this is going to be influential enough to cause bond yields to continue to rise for the meantime. Now, that is mostly it for the day. I am planning on putting a video out later today on the politics channel, Stoic Politics, which is going to be talking specifically about China's plans to invade Taiwan, because recently, over the last couple of weeks, we've gotten some new information, a new hour-long recording from Chinese generals and politicians talking about just how they're going to take Taiwan, how they're going to prioritize and strategize and do all sorts of other things. A couple people have been executed over this leak already, so you can best believe that actually this is quite major news and definitely worth talking about. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. They can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, a site that allows you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you think that crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.